Good morning, ladies and germs. This is the Flow Show. I'm Sean McLaughlin. That's Steve Straza. We are back for another episode that everyone looks forward to. I promise you, whatever we come up with this week will not match what we did last week. That's just not going to happen. But anyway, Straza, how was your weekend, buddy?
It was great, but I want to hear about yours. So Sean was in the Redwoods?
Yeah, I took the family on a hiking trip to the Redwood National Park in Northern California, near the border of Oregon.
Yeah.
It was unbelievable. I've been there before, but we did like different parts than I did. It's a huge, huge place, right? There's so many things to see. So I'd been there before, but we did different hikes than I did last time. And man, so epic. If you've never been, if you like hiking, if you like nature, and who doesn't, you gotta check that off your bucket list, man. It's amazing.
So where you were was right on the California-Oregon border. All
Yeah,
the way.
real close. Like I think we were like 10 miles from the Oregon border. Yeah, way up there.
So,
You fly into a nice little airport called the Arcata Eureka Airport.
yeah.
It's one gate. The building is like the size of a small bus station. It's hilarious.
Oh, that's
And
cool.
and the you pick up your car rental, like you walk out the door and the car rental's right there. I mean, it's like you went to a grocery store. You know, you pick out your groceries, you walk out and your car's right there and you go home. It's amazing.
So you must have gotten your fill for hiking. Would you do like a full weekend of hiking?
Yeah, we did 2 full days of hiking, and then like the first day we arrived on Thursday.
Yeah.
We arrived at like 1 o'clock in the afternoon. So we got like in the afternoon, we got a little bit of hiking in. So let's call it 2.5 days of just full immersion. And it was amazing.
That's awesome.
Yeah, yeah.
Good for you.
Anyway, this is the Flow Show. If you're new here, what me and Straza do is we do our process in the open for all of you to see how we come up with trade ideas in All Star charts and All Star options. Straza will hit me with some ideas of some setups that he likes. I'll look into the options, see if there's a play. Sometimes there's not a play, but that's just how we do it. This is how the sausage is made, and we thought you'd all hopefully learn a little bit from watching us do what we do. So Straza, what's on your mind this week? You've had the whole weekend to digest what's going on in the markets. What's on your mind?
I got a couple things. We're coming off really an oversold bounce that began, I don't know, market bottom Friday. It's now 2 Fridays ago, so April 19th. Right. So, about 6 trading days where we're moving higher. Just to give context where we're coming from, I'm zooming out. It's our first oversold reading. You can see in the lower pane here.
Uh-huh.
Fairly oversold, but still oversold since the October lows. So the bear market lows, October of 2022. This is, right? So kind of a big deal in the context of a bull market. That's an very extreme reading. Shouldn't get oversold at all, ideally. But the last time we were even close was the October lows of last year, October 2023, coming off 3 months of corrective action. And then this is the rally that ensued. I have short-term rate of change up here. This is the 5-day rate of change. At a lower level, this is the NASDAQ 100, than we saw at any point during that 3-month correction, just here 2 weeks ago. Okay. What stands out a lot more, though, is China. So China's coming off an oversold bounce that's more structural in nature than the tactical oversold bounce we're getting in the US. I think there's some really clean levels here. We're still in a range, but talking about NASDAQ 100 getting oversold for the first time in a year, China is overbought for the first time in over a year, confirming these new multi-month highs, highest level since November of last year. And from a short-term rate of change perspective, we have a lot of momentum accompanying this, right? So this will be the highest reading since about summer of last year. And this looks even better on relative terms. So this is China relative to the S&P 500. Again, the short-term rate of change, highest since last summer. Momentum, firmly overbought. Hooking higher above, a shelf of highs here. And then, really, we prefer Chinese internet as a vehicle. The best stocks in China are these tech names. KWeb is a great fund for that. So here's KWeb SPY. So this is Chinese tech. relative to the S&P 500, getting overbought, short-term momentum registering its highest reading since July of last year. Again, multi-month highs. And if you look at K-Web on absolute terms, starting to look like a base, starting to look like one of these reversal patterns that we've been buying since last year. Here's K-Web, short-term rate of change, highest since, again, July of last year. Breaking trend here. Nice little short-term base within the context of, I think, a much longer-term, more primary trend reversal that will probably draw like this soon. I guess the question for China is, are we a little bit early still? Right. So I think we eventually draw this one like this, Sean, and we're breaking higher. And this is a similar reversal pattern to all the other reversal patterns we've been buying.
Yeah.
I think there's something here now. But I could leave you with this one and jump to another theme if you don't
Well,
mind.
I guess the question I had is you started this riff with the QQQ with the Nasdaq.
Yeah.
Are these two related or
Yeah.
okay? So you're
So
thinking,
US tech, NASDAQ to Chinese tech, you're getting, sure, we're coming off a little corrective phase for US equities, but China's been down on the ground for far longer. Maybe there's a longer term strategy or longer term trade that's worth, I don't know, kind of looking into for
so
China.
between US tech and Chinese tech, you're thinking the risk appetite seems to be improving a little bit, which could bode well for just risk assets in general.
Look at this. I love this. Yes, totally. So I think this is just that rotation that we've all been waiting for so long. I think ex-US equities are going to take the driver's seat here from US equities. And I think one of the most extreme ways you can express a bullish thesis on ex-US equities would be the biggest laggard of them all, China, right? So here's K-Web versus QQQ, hooking higher, not just breaking out, like what I think is a really nice little short-term reversal. This is a little base that's been forming all year, surging higher, getting overbought, short-term momentum's there, back above these lows from 2022. Yeah, I think the rotation is on. So
All right.
China, you want to look right now.
So you got some names that play into this theme that we should look into?
I do. So JD.com. This one looks probably closest to the index itself. So let's just draw this out. There's that little short-term reversal, right? Coming off of a huge level. If I were to zoom out on JD, this is what I really love about this one. So we've seen this stock bottom here. 1, 2, 3, now 4 times, getting a little bit of confirmation right here with, highs not seen since September of 2023. Zoom into the daily. I think, if this base is intact, next stop here for JD would be up around 40, low 40s. So that's 33% move.
Yeah.
More tactical there. I think, one that we've liked and leaned on as far as China's concerned is this 10-cent music. Continues to look better than anything, but a little bit extended now when I look at this chart, right? I love this. Love this bullish momentum regime. We just keep hitting overbought. Momentum on corrections is barely dropping below 50. But I think, this might be, I think this was an easier trade last year, to be honest. The reversal's already in here, back above VWAP. I'd rather be buying this one on weakness. Another one that we kind of been going back to the well on. I like this coming off some weakness. Pindodo. Now they call it PDD because of people like us coming on here and butchering the name every time we call it. So this is PDD Holdings, another online retail. So if anyone's kind of following along, all these names are really online retail, 10-cent music, online music, whatever, spin off from 10-cent. But I think there's something here with PDD, and I like that we're buying weakness in a way. So could draw that
All right.
base. That,
You gave me 3 charts here.
Yeah. Boom.
Uh,
Look at that. This is my
yeah.
favorite.
That one's your favorite?
Yeah.
Okay, let's come back to this one then, because I did have a thought on JD.
Oh.
So let's go back to JD for a sec. I like where your head's at about, at least if there's some follow through here, the first stop is in the low 40s there.
Yeah.
potentially even higher than that.
Yep.
Um, in the recent, well, it's still recent. In the most recent sell-off where it stock bottomed in mid-March there, or early March, um, volatility spiked as could be expected, right? It came off a bit once we rallied, but volatility is still at a pretty elevated level in
Yeah, it
JD. And
is.
my hunch is that that is because people are seeing what you're seeing, and that is if this thing's going to get going, there's a lot of potential explosion to the upside. And I think speculators are betting on the upside, which is driving upside calls. That being said, doesn't mean we can't play it. I like this trick. I like playing this if we were to play it. Maybe looking out as far as September, so give us some time, and doing a bull call spread where we buy the September 30 calls
Yep.
and sell the September 40, which is right around that first level of potential target.
Yep.
So that would be a good area for it to pause if it's going to pause. We could buy that spread. It's a $10 wide spread. We could buy that right now for about 275, which that makes it worthwhile if it rips up to 40. We'll at least double our money on that, potentially significantly more.
Yeah.
The most the spread could be worth is $10, right? We pay 275 for it. Basically, the most we could do is nearly quadruple our money. We'll probably get out before it gets there, of course. But I kind of like that trade.
It's a solid risk reward. And a stock like JD moving 30% in a couple of months, it happens.
Yeah.
Yeah.
So let's put a pin in that. I like that idea, but I did not look yet at the PDD. Let's check that out. See if I like this one better.
Another one, Sean, I'll throw at you. Same theme, maybe not China, but it's Korea, it's emerging markets. Coupang, the CPNG, the reversal's in and it's really clean. So maybe check both of them. Just pulled up the Coupang
Yeah,
chart.
that coupon. Yeah. I feel like coupon, maybe if we're patient, we might be able to buy it back in the near 21 handle area.
So this since breaking out, and we've talked about it just 2 weeks ago, we talked about it. It's remained overbought the whole time. So it hasn't given us a chance yet, but we'll keep it on our radar.
Yeah. Just at first glance on that coupon, probably played a similar way to JD because it's kind of a similar story. Implied volatility is pretty high. So we don't want to be just straight buying calls here because we'd be, not that you can't win if you bought straight calls, but you're paying more for it. It's more expensive. So you got to be more right to get paid. So I'd probably do it with a spread, probably bull call spread, similar situation. I mean, sometimes if we weren't talking China, Straza, I would look at a name like this and be like, maybe this is a risk reversal action here. But I don't know. Call me old school, call me old grumpy guy, but I don't like not defining my risks and anything coming when it comes to China.
China's risky enough, is what you're saying?
Yeah. I don't want to be exposing myself to some shenanigans, that could very easily take place with Chinese stocks. So maybe I'm just, being a wimp. But hey, I like to preserve my capital. So anyway, coupon is all right, but let's pull up this PDT or PDD. Excuse me. Let me just look at my thing here.
Now this I like a lot more.
Yeah. So we had that big gap in December or late November. We've come back and we've filled that gap and basically holding there. Can you zoom out on your chart a little bit? I just want to get a little bit more of a bigger picture there. And so are those the all-time highs at about 200 there?
Yep.
This one, I think you could play with just calls. Maybe go a little longer term. Like if we look at January, I'm just curious here.
Why not go out? Yeah, give it about a year, almost a year. And what are
Well,
like the 200s? Is that too
so
far out?
here's the thing. I don't know if I love this or hate this, but the 25 delta options, which is what I like to, it's just kind of my natural default, as we've talked many times in the past.
Yeah.
My natural default, I like to buy the 25 delta calls. In January, that corresponds with the 185 strike, and we'd have to pay $6. We probably six and a quarter for them. Um,
Mm.
I don't know. I would like that more if I felt really confident that we'd break clear through 240.
So yeah, that's what I'm thinking. From current prices, we're trading around 126 today. We would want this one at, you said 185, so we would need this
Yeah.
around
You
190.
know what? I
We
would
would
feel
need like
more.
a 50% move, Sean.
Yeah. Not only that, but I would feel more comfortable buying calls if this thing was actually breaking out now. We're trying to jump a breakout, and this thing could take its time right now.
All right. How about the indexes themselves?
Well, we're already in FXI. I don't know if you remember. I don't know if you're in that trade, but I'm in FXI,
Did
and
we do
which
that
it's
on
it's
here?
working well for us.
I don't remember that. Oh, you guys are buying it at the lows earlier this year, right?
Yeah, JC and I got into it in like mid-February. We kind of legged into it. We took our time, bought it in three tranches. We got our three tranches, and now it's working well. I mean, knock on wood. Let's go back to that JD trade. I actually kind of like that JD trade. It's aggressive, but not incredibly aggressive, and the stock is starting to break out. So
Yeah.
that is a good sign to me.
Really
Um,
love the momentum here. Overbought reading, confirming this little base breakout. Yeah, lots to like here.
Yeah, I think buying a September 30-40 bull call spread and paying 275 for it, I feel like that's a good trade. That's a good risk. It's a good risk to reward. We're not gonna. I don't think we're gonna lose 100%. Like if we're dead wrong on this thing, I think. I mean, we could probably be pretty tight with our stop, right? I mean, maybe around like 27. If it loses 27, then I don't know. Maybe that just brings it back into the soup there. Certainly, if it breaks 25, we want out.
I think you keep it tighter than that, Sean.
You think so?
Yeah.
You think 27?
Yeah, I don't want this below 27.
Yeah.
And
So,
also 27 here, just to be clear. 27 leaves enough ample room for a shake, right?
yeah.
We're back in this zone here, really at all. This trade is suspect. So a little shake and go would be fine if we did something like this, right? And then went, but you don't want it down here at all. So 27, definitely.
Yeah. And the nice thing too is let's
28.
let's say this thing just rolls over on us right now, right? It's fully exhausted itself right now, and it rolls over in the next week or two. Well, if we're paying 275 for that spread today, and we get stopped out a week from today, maybe we get out for $2, a buck 75. So not a terrible loss at all.
That's not bad.
Yeah, yeah. And our friend Jason over at TrendSpider just chimed in that seasonality for PDD, 100% win rate in June. So maybe that'll help us out.
That's awesome. Love that.
All right, I like it. I like it. Listen, and you know what? Just for completeness sake here, let's do this. I wanted to, Gene, can you go to my screen here? Share my screen for a sec. I'm going to do something here. We don't do this all the time because it takes time, but I'm going to show you what a P&L graph, for those of you who might be a little bit new here, don't know what a bull call spread looks like, how we profit. I'm putting together a spread here. We'll just do a one lot just to make it easy.
So what would be the ideal outcome for a bull call spread? Something like this, we're trading right around $30 today. We're going to do the 30-40 spread. How would we want this to go in a perfect world? How would you manage it?
In a perfect world, this thing goes right up to $40 and it takes its time because we have until September.
Yep.
It gets up to 40, sometime, early summer, midsummer. And we close it there. We capture most of the full value of the spread. Obviously, the higher it goes above 40, the better for us, right? No problem. But here's kind of what the P&L graph would look like here. Let me clean this up a little bit. Less lines. I hope you guys can see this okay. So the stock right now is trading right here. Okay, so right about $30, just a little shy of $30. We'd be buying the September 30 calls. And this blue line that you see here, this is what the the graph, the P&L of the position would be on expiration day.
Yep.
Okay. So if this was, September 20th, then wherever we are along this, the prices of the stock are along the horizontal or the X axis here. If the stock's at $45, right, or $48, then our P&L is going to be basically what this blue line is. The purple line is what the P&L approximately would be today. Now, these are all approximations because there's a lot of moving parts in options, in the value of options, right? It's not just the direction of the stock. What is volatility doing? Volatility affects the premium of the options, which is the big unknown, right? Nobody really knows what volatility can be. We can all estimate it, and there's really smart people who can estimate it. But again, it's just an estimation.
But the graphs are just based on historical vol then?
Yeah, more or less. So if this stock were to rip today, right? If this thing, all of a sudden some news comes out and this stock rips higher to $40 today, then this spread that we paid $275 for, right up at $40, we'd be sitting on a $340 gain. So the spread would be worth about $6. The most it could be worth is 10. But today it'd be worth about 6 if it got all the way up there, which would be, about a 300 change gain.
So we wanted to go to 40, but slowly. We wanted
right. We'd like it to go slow. We'd like it to go slower. Like down here in the bottom right hand side of my chart here, I could change the date here. So we're looking at today's date. Actually, we're looking at today's date. Let's just, for hypothetical sake, let's move the calendar forward. Let's say today is June 28th. All right. This is again hypothetical, but if the stock is at 40, you can see where my cursor is there. Our P&L would be about $400 versus today. Let's go back to today. So $400 versus today, our P&L would be about $338. Right. So the closer we get to expiration, the more this spread will work. So we wouldn't mind it if it took its time, right? As long as it doesn't stop us out along the way.
Yep.
But I do like selling the 40 strike, and you'll notice our gains are capped right above the 40 strikes. We're short the 40 calls. Our gains are capped. We can't move. The spread will never be worth more than $10, and that's the difference between the 30 strike that we buy and the 40 strike that we sell. The most it'll be worth is $10. We're paying $275 for it today, give or take. And I like it because, as you said in your chart, Gene, maybe go back to Straza's chart there. That low 40s looks like a logical place for the stock to, if it's going to run, it's going to target that area. And then it would totally make sense for it to pause a little bit, digest. There's a lot of bag holders who will be happy to get out of their long position that they've been stuck in for 8 months. They'll be happy to get out there, and that might slow things down. So capping our upside at 40 is great. I like this trade.
I like this, and I think we're probably going to be doing more of this, Sean, in the back half of this year. Emerging markets, China, things that are not U.S. I think more and more long opportunities are going to keep popping up overseas. I'm excited for it. And this is a big thing. This was in the NASDAQ 100 up until just last year.
Was it really? Yeah. A Chinese stock was in the NASDAQ 100?
Which, think about it. As soon as they take it out, we're buying it. How many times have we done this? It's fantastic. I just love it. Sentiment is so good.
I mean, we joke about it all the time, but we really do need to build a scan that lets us know whenever something leaves a major index or when an ETF closes. When those two things happen, those are the best time to buy those stocks.
We could do a chart book of it.
Yeah, we could probably build a hedge fund around that and just outperform everybody.
We can make a new column about it. Just
all right.
Lines and index providers.
We could get Jason Shapiro involved in that. That's right up his alley.
We love that. Yeah.
All right, guys. I like this trade. The JD, buying the September bull call spread, buying the 30 calls, selling the 40 calls, paying around $275, $280 for it, and holding up until we get around 41, 42, and that's where we take profits. I like it. I'm going to write it up, buddy.
All right, let's do it.
All right. Everybody, this has been the Flow Show. Now you've seen how we make the magic happen here at All Star Charts. He's Steve Straza. I'm Sean McLaughlin. Thanks for tuning in. We'll do it again next week, same time, same channel. Until then, we'll see you on the morning show this week. Take care.
Happy Monday, everybody.
Woo!